Don't we love a good conspiracy theory? For years, de-dollarization was dismissed as a conspiracy theory. Not any longer. New data confirms the dollar's share of the global reserves has dropped significantly over the last 2 decades. Economic uncertainty means you have to keep up with what's happening. Make sure you subscribe and we'll keep you in the know. The dollar drop has prompted one of the world's legendary economists to claim America's poor handling of the dollar means it's on the way to becoming what he calls an unhinged paper currency. In an appearance before Congress last year, Treasury Secretary Janet Yellen grudgingly admitted that de-dollarization is real, saying, "We should expect over time a gradually increased share of other assets in reserve holdings of countries, a natural desire to diversify." In fact, according to the Atlantic Council's Dollar Dominance Monitor, the U.S. dollar's share of global reserves has dropped from 72% in 2002 to 58% in 2024. As for the reasons behind central banks' desire to shed dollars, the Council says there's no mystery. In recent years, and especially since Russia's invasion of Ukraine and the G7's subsequent escalation in the use of financial sanctions, some countries have been signaling their intention to diversify away from dollars. Arthur Laffer, the legendary economist famous for being the father of supply-side economics and an advisor to presidents, isn't surprised by any of this. In a recent interview with Kitco News, Laffer lamented, "The U.S. dollar has made itself as unattractive as it possibly can be to world transactions." In Laffer's opinion, this has happened for the same 2 reasons cited by other experts: fiscal recklessness and the federal government's use of the dollar as a blunt instrument to enforce U.S. foreign policy. People are moving into all sorts of alternatives to the U.S. dollar, and it's only natural, Laffer said, adding, "They will move to a separate, alternative regime in the global economy. Maybe Bitcoin, maybe gold, maybe some other set of currencies, but that is the direction we're headed in." In fact, there's some evidence that move is being made right now, which makes it very important to understand what is happening. According to the World Gold Council's recently published 2024 Central Bank Gold Reserve Survey, 62% of central banks expect the dollar's share of total reserve assets to decline over the next 5 years. In that same report, 81% of central banks said they expect gold's share of reserves to rise over the next year, and 69% said they expect it to rise over the next 5 years. Experts say the rush to gold by central banks, in part, is in line with the points raised by Laffer about de-dollarization. In their assessment, it reflects the desire of multiple central banks to replace at least some of their dollars with a physical and highly transactable asset reflective of minimal sanctions risk and fiscal risk. Take a moment and think about what de-dollarization could mean to gold. The implications could be substantial. By itself, a move away from dollars has the potential to cause at least some dollar weakness and even instability, which numerous analysts say could generate gold-favorable conditions. And in the opinion of Laffer, the potential for a distressed U.S. dollar is still on the table, as long as the government's poor handling of the greenback continues. And I have not heard of anyone discussing a change in U.S. policy. We are moving away from monetary stability. We're moving towards an unhinged paper currency, Leifer said, warning, there's nothing that can bring an economy to its knees quicker and faster than unhinged paper currencies. Now that de-dollarization is no longer a conspiracy theory, what will be said next to tell us not to worry about the dollar? And will any future concerns also be labeled as conspiracy theories? That's why I suggest you take the time to learn more about what's really going on in the economy by attending our exclusive one-on-one web conference at AugustaPreciousMetals.com/webconference.